Hello everybody, my name is Gary Yao, and today I would like to share with you some of the points that were mentioned at the Federal Reserve meeting this past September 16, and how does that affect the real estate market moving forward. So let's get started. The first thing that that was very crucial and that was mentioned at this meeting is that the Federal Reserve decided that interest rates are going to be kept it's going to be kept relatively low. In fact, the rate right now is less than 3%, and that rate is going to stay pretty much until 2023. So rates low, interest at right now it's hovering at less than 3%. And I'm talking about the real estate mortgage lending interest. So yeah, that's what we're going to see up until 2023 at least. So we're seeing that we're going to see relatively low interest rate for the foreseeable future in the next 2 to 3 years. Next, we're seeing that we're switching from a service economy to a product purchase economy. In fact, we're switching from product from 17 to 23%. What does that mean? It means that we are, let's say for example, we don't have a personal trainer, or the gyms are actually closed, and therefore there's no need, or there's no possibility to have a personal trainer. So what do? Most likely you're going to build a home gym, or you're going to buy a bicycle, a static bicycle. So we're switching from having that service to having a product that you're going to be using. So we're seeing an increase in products that is slowly replacing what might be a service. Now, how does that translate into the overall economy? Well, it means that the economy hasn't stopped. It in fact has switched from one area to another. So you're going to see a lot of businesses that are going to be transitioned. For example, you're going to see a lot of businesses that are changing from brick and mortar into the online space. A lot of deliveries and a lot of online shopping. And how does that move forward? There's money in the system. So let's talk about forbearance. So what is forbearance? It means that if you are unable to pay your house, the mortgage of your house, you can request your bank to have a freeze on your payment so that you can catch up later. This usually forbearance dependent on your bank. Well, most of the loans are actually backed up by the Federal Reserve, which means that you can have a forbearance to up to 12 months. So think about it. We were talking about possibly that we're going to see a lot of houses being foreclosed because people are not able to pay for their properties. But if we have forbearance and you have 12 months, so let's say that the pandemic started in March. So you have until March 2021 to worry about paying your first month, to start paying again for your mortgage. The 12 months you don't have to pay in one lump sum. In fact, you can actually pay it at the end of your loan. So if you have like 20 years left, that one is going to be 21 years instead of 20 years, because you actually move you actually move the 2020 payments into March 21st, so you're going to start paying again. Now, if you think about it, future money, if you have a $2,000 or $3,000 payment per month, how much do you think that's going to be worth in 2030 or 2040? Future's money is going to be cheaper than today's money based on inflation, which means that if you have that money, you can put it on investments in stocks, for example, or you can actually just save it so you can have for a rainy day. And let's say that you have you're a landlord, and your tenants are not paying for your monthly rent, well, you still have to you still don't have to pay it yet. So, but your tenants are still owing you money. So of course you're going to, once the what they call the protection for tenants ends in December, you can replace those tenants and still have forbearance. What I'm saying is that we may not have that have that exodus of people. We will not have that flu of foreclosures because we have a lot of cushion in place so that it will protect the landlords. Oh, where was I? Next, we have exodus of population from cities. We were talking that cities like New York, people are moving away and moving towards the vicinities in rural areas. We're all talking about also that in LA, people are moving from the big cities, central LA, more towards the east side, maybe from the west side, or maybe west side, or maybe like Brentwood or downtown LA, moving more towards San Bernardino. But that has been happening already, even before all this. What this has created is that, well, since you have the opportunity to work at home, it's more now appealing to actually buy in farther away areas. Before, even now, people were traveling 1 hour, 2 hours each way. So you spend 2 to 4 hours a day just on traveling. And people are willing to do that because you could afford to live comfortably, and of course you have to give up on the comfortable, being comfortable by driving. That's a sacrifice. You have to drive back and forth for many hours, but you were to live in a comfortable home. Now that you have the option to work from home, well, that has become more appealing. Therefore, we can see that the rise in price in properties has been evenly throughout the area. We will see a lot of rural areas picking up in price, and at the same time, we're going to see urban areas in LA having more chance for more people to purchase. As we explained before, it is more affordable now to buy property because of the low interest, right? Because of the low interest than before. So you can actually buy bigger property, more expensive property, and that has leveled off throughout the whole area. So in other words, is properties will continue to go up, at least in the foreseeable future. We can see that it's going to go up this year and part of next year as well. So we can plan accordingly, and this is just information that, again, it may change because things are changing so fast in these times of uncertainty. But from what we gather, again, from the Federal Reserve meeting, this is what we predict could happen. And of course, again, it's going to change. If you have any questions regarding real estate, let me know. My name is Gary Yao, and I will talk to you soon.